Good morning. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday, the 23rd of May. My name is Kevin Hurley. I'll be with you here today for the next 25-30 minutes. And really what I want to work on or focus on today that regards to trading is your thought process of how and when to do certain trades and certain things within your portfolio. So that's what I want to focus on today. I have already heard through numerous people that today the market is getting killed by being down 1.52%. So I want to work on a perspective on your account today using Apple, Baidu, Boeing, Under Armour, and Visa stock positions and give you a general idea on how I'm going to look at it. So if you are down 1.52% today, because that's what the S&P 500 is, to put things into perspective, are you getting killed? So I see a couple no's and I see a couple yeses. For those of you that say yes, please explain to me how you're being killed. For those of you that have a no, please explain to me why you are not being killed. Part in pain, part in joy. So that's an interesting one. And that's from someone that didn't even write a yes or a no. 4 of you said, 2 said yes, 2 said no. I'm going to kind of focus on you 4. How are you getting killed? I'm down $3,000. Okay. So I'm going to do the math then. Is that $3,000 a full 1.5% down? Okay, so it's about a 1% down. So let me put this into perspective. And I'm playing catch up. So if you are down 1%, doesn't that still mean you have 99% of your portfolio still available to you? That's the question, right? There's the $1,000,000 question. Bill, I'm going to go over that article here in a bit. So help me understand. It's not about having 99%, or in this case, I'm going to say $297,000. It's about losing 3,000. So if you lose 1% or 3,000, but still have $297,000 available, and actually are down 1%, not the full 1.52%, And I'm going to make this as simple as I can. And Dave, we've known each other for probably going on 8 years now. So in no way am I trying to pick on you or be rude to you. But if that is killing you, with all due respect, you have no place to be in today's stock market. You should not be in the stock market. The stock market is not appropriate for you. You don't have the risk tolerance for today's stock market. It is not a place your money should be. We need to talk. Your money should be in a savings account, or it should be in a annuity. That is where your risk tolerance for your money should be. Based on today's answers and your perspective on your money in the stock market. And the reason why comes down to your time frame. The market is not a place for you to be. And again, it comes down to your risk tolerance and your perspective. If all you're seeing is today and not how you're beating the market by 0.5%, and that you still have 99% of your money there and available to you to make back the 1%, you don't understand how the stock market works. It's not a place for someone of your understanding. And I am saying that with all due respect. I would say that to anyone. Second thought process, and I've heard this today. Protection is paramount, right? So I'm going to bring up a couple positions that I have protection on and a couple positions I do not have protection on. Let's go with Boeing first. And I will admit I do not have long put protection on Boeing since beginning of last week. So let's take a bit of a look on this one. We have, today's Thursday. So we have this is this week, and this was last week. And I cashed in some protection. Where is Boeing trading at right this moment? Boeing is trading at on this chart. Last trade, 30.4707, right? So couple things I'm going to point out. Last week, when we sold protection and bought in at 344, let me find where we're at, 344.67. We let Boeing run, and there was no question about having long put protection on, right? Which, of course, why would anyone complain about no long put protection when we run from 340 up to 359.80, right? $18, $19 run. No complaints, no arguments, no questions about long put protection. We're doing fine. Should I have put long put protection on Tuesday? Let me put Tuesday on there. Well, we actually traded above the 200-day simple moving average. So I chose to give it one more day. Yesterday, we were down. So let me put into my head what I hear. God damn it, Hurley, put long put protection on. That probably came from Keith Bybee, one of my advisors that works with me. Great guy, keen eye for doing spread trades. And I said, I'm going to choose not to. And then we had this run today, and oh my gosh, it's all the way down to 342. It's now $5.07 higher than the lows of the day. Why are you not putting protection on? Well, because Boeing is actually meeting with 30 countries in the FAA, Federal Airline Association, whatever it is, and describing how they have their fix and how they're ready to have their planes recertified to get back flying. So why am I not spending money on protection? Because I don't use just technical analysis or just fundamental analysis or just sentimental analysis or just news or headlines. I'm looking at it a little bigger picture. In my mind, it's trading at 347.07. So to give you an idea how I'm looking at it, now trading at 347.07 and was down to 342 even. But I see a bigger time frame. I'm going to go back a week and a half. I see we are higher on new shares added with profits from long puts, and 300 shares higher than where we were a week and a half ago at the 344.67 price that we bought in again. Now, in all honesty, I'm taking a look and saying 400 shares now, about $2.50 higher than where we're at. It's about $1,000 up. I have $1,000 of play to let the stocks move the way that they are moving. I am okay with where Boeing is at without some long put protection on right now. But shouldn't you always have long put protection on? Very interesting comment there. So let's just kind of put this into perspective and let's ask the group. Are you guys okay with buying protection for a year? So that's the first question. Do we buy protection for the year? Yes or no? Do we buy protection for the year? Yes or no? Bill, Abraham, Lance, Dave, and David W. You guys could not have put no in there quicker. I'm going to ask you why, but if we do, if we do protection for a year, we need to go out to June 2020. We protect at 345, 346. We're going to make it cheaper. We're going to do 340, 350. 346, probably going to protect at 350. It's going to cost us $42.20. It's actually pretty cheap. Going to June 2020 will cost us $42.20 is what we saw. $42.20. Or, let me get a calculator here. Or $42.20 divided by 346, 12.2% of our total invested capital. Why do we not protect it for the year? Cost efficiency, right opportunities to be assured, intuition has a place here. Of course, Abraham. Really, we don't protect here because we have 4 earnings and want to protect profits on a quarterly basis, right? If it goes up $40, if it goes up $40, why am I not doing this? If it goes up $40, don't we want to protect that 10% growth or that $40 into the future? The problem is if we put this on for the year and it goes up $40, we'd have to go backwards, right? That $42 is going to go down $40 will be worth somewhere between $24 and $28. In which case we're now re-protecting up there and we're kind of screwed, right? Okay, Kevin, so let's do it quarterly. Every quarter, let's go ahead and put long put protection on, which means we're going to go out to August, right? get us through this quarter up into the next one. Since you want to protect quarterly, it's my choice, right? You got to protect quarterly. Actually, let's see. When is Boeing's next earnings? 7/24. So we go out to August. August 340 actually cost us $17.40. And of course it'll move around, but if we're going to protect quarterly, right? $17.40. If we multiply 17.4 times 4 quarters, now we have a cost of roughly $70. And if we're protecting every quarter at the money, always protected between all the earnings and everything, $70 divided by 346 is 20% of the total invested cash flow, which means your stock has to move 20% over the year before you'd make a penny. Here comes the question. Are there times when we let the stock run? Yes or no? Are there times when we let the stock run? Yes or no? Of course, right? Yes. Why put bearish positions on bullish stock? Why put bullish positions on bearish stock? It just doesn't make sense. Which comes down to something simple, right? Which comes down to make your best darn educated decision and then learn to stick with that decision over the time frame you were looking at. Now, this does not mean that if something new is introduced, you just stick with the poor decision. It does not mean that you, just because I'm losing, I'm going to stick with losing because Kevin Hurley told me so. No, you've got to use some common sense. And unfortunately, common sense is something that some people are lacking sometimes. You can't trade options and pull them on and off every single day. Time decay, volatility crush, spreads will kill you. They will kill you. You won't ever make any money. Most stocks don't move 20% in a year. In which case, if you're always protected, you will not make any money. And if you need to live off of some of this money, you need to make some money. Now, there have been some articles, an article out today on Apple that says Apple will no longer make any money. I've heard that. I get it. Some protective puts are in place. We haven't taken them off yet. I'm okay. We had some covered calls on protective puts. I'm probably going to need to take some of those off. I've got some way out in time long calls that I can play with the stock. On a day like today for Apple, Apple is down $5,257 on at least $1 million that I have in Apple all the way across the board. So again, if you look at me, I'm down $5,200 on Apple, on over $1 million in the stock market today. I can live with that. Baidu, another $1 million, almost 964,000, down $1,235. I can live with that. $1 million with spread trades. On my stock position, I'm basically covered 100%. On my long call positions where I'm losing my money today, I can live with that. Under Armour. Under Armour's down 51 cents at 23.76. I don't have protection on yet. As I look at Under Armour and how it's been beating the market, it's had its run up. Do I need to add some protection on? Possibly. But technically, I'm still bullish on Under Armour. All we're doing is coming off of the overbought category, bullish all the way across the board. I might be able to let Under Armour sit for a day. It's testing the pivot point at $23.99. I will look at it at the end of the day. Visa. What an amazing chart. Still technically bullish. I do not have protection on Visa, and it's flat. It's flat today, now down $2, holding the 161.90 pivot point, the center middle pivot point, the mathematical most common most probable point to hold its support level, its most recent short-term support level, and it's 15 cents above it. Plain and simple. We had protection because of earnings that helped through here and that really helped here, and we got rid of it right around there. No complaints as we went up from 158 to 165. No one's calling me. Oh my God, you don't have protection on Visa and it's going up. Of course not. Our first 1 day down. Oh my God, get protection on Visa. Relax. Relax, relax, relax. We're not in a 2008 scenario. Visa itself is still beating the market today. Please take a step back and relax. At Hurley Investments, we're making our best educated decisions. And we're not day traders. We're not day trading. We do a shitload of research, to put it mildly. We spend hours upon hours upon hours reading through articles and looking at news and bouncing thoughts off of each other. All three of us, have you heard this? Do you have this? I even have clientele that sends me stuff all the time. I love it. Rarely, if ever, do I miss any of it, but occasionally they send me one that has slipped by me. I spend hours every day going over tons of information. So when you hear one new piece that comes out and it freaks you out, understand I'm not impressed. I've got 100 other articles I've read before that one that make my decision. I don't make my decision on the newest article sent out from somebody that God only knows who they are that writes a Seeking Alpha article. I don't pay attention. I don't make my decision on the one analyst from a no-name firm that downgrades Apple or writes a piece about Apple. I take a ton more information in to make a decision than just a single news event, a single article, a single one day down in the market. If you choose to take that amount of research and come to me, I'll probably give a little more credence to your worries. But again, minimum 5 hours a day I'm spent going through core positions and reading and documenting and crunching numbers and writing future earnings per share projections and going against charts and overlaying charts over future earnings projections. I spend a minimum, a bare minimum of 5 hours a day going over all this stuff. So if there are times you call me and I don't show very much empathy over a single article that you spent 30 seconds on, you now know why. Guys, today's not a day to put a trade on. Thinly traded, big money was really out yesterday. Look how low the volume is today. It's just a thinly traded wild market. For all intents and purposes, you can ignore today and tomorrow, and it will most likely come back as a buying opportunity for smart money on Tuesday. Relax. That's what I'm going to give to you right now. Today is a day to take a step back and relax. Guys, have a good day. Enjoy your 3-day weekend. I will send out a midweek commentary on Monday evening. And Tuesday we'll be back into our trade findings. You guys have a wonderful day. I will talk with you again soon. Have a good one. Bye-bye.